hold on to your wallets. The financial landscape is shifting rapidly, and it's not looking good for the average consumer. US tariffs are causing a market meltdown. After a 30-day pause, the United States has slapped new tariffs on its trading partners, sending shockwaves through the financial markets. The United States has slapped new tariffs, and the repercussions are being felt globally. 25% on imports from Canada and Mexico, affecting a wide range of goods from agricultural products to manufactured items, and 10% on Chinese goods, which includes electronics, textiles, and more. The market reaction? Immediate and significant. Investors are scrambling to adjust their portfolios. The S&P 500 has dropped over 2.5% this week, hitting its lowest point since Trump's election victory. This decline is causing widespread concern among investors. The market's downward trend is a stark contrast to the highs seen during the early days of Trump's presidency. The Dow Jones, down 3.57% in just 2 days, a total of 1,347 points. This rapid decline is alarming for many, and the VIX index, Wall Street's fear gauge, has soared above 20, signaling extreme uncertainty and volatility in the market. This level of uncertainty is unprecedented in recent times, causing stress among traders and analysts alike. International reaction has been swift. Countries around the world are responding to the US tariffs with their own measures. Mexican President Sheinbaum announced retaliatory measures aiming to protect their economy from the impact of US tariffs, and Canadian Prime Minister Trudeau called the US decision very foolish, indicating a strong stance against the tariffs. Trump fired back, threatening equal counter-tariffs, escalating the situation further. Meanwhile, the EU is gearing up for a response, preparing to defend its economic interests. Retailers like Best Buy and Walmart are taking a hit, with stocks plunging 16% and 4% respectively. This is a significant blow to the retail sector. The impact on consumer confidence is palpable, as shoppers are becoming more cautious with their spending. But automakers are catching a break with a 1-month exemption on tariffs, providing temporary relief to the industry. This exemption is boosting stocks for Stellantis, Ford, and Volkswagen, giving them a much-needed respite. Despite strategic objectives like domestic investment and job creation, skepticism remains. Many are questioning the long-term benefits of these tariffs. Investors fear a potential trade war and economic slowdown, which could have far-reaching consequences for the global economy. The US dollar is down, gold is up, reflecting the market's flight to safety amid the turmoil, and the long-term outlook is murky. Analysts are debating the potential outcomes, but uncertainty prevails. Will the US market dominance end? Only time will tell. The coming weeks and months will be crucial in determining the future trajectory of the economy. Stay tuned for more updates as this situation continues to evolve. The financial world is watching closely.